Good evening, everybody. Sorry for the delay. All right. We're going to kind of do an educational session before we do our regular session tonight, so we'll go a little bit extra long. But the one biggest very low sound, is that in everybody's case? Sound is good? All right. Might be your own computer. All right. Okay, so the reason we're doing information on the T-line is because everybody always asks about the T-line. We've got people all over the world now using the T-line because it's been so effective. And I constantly get emails or Gmails saying, thank you for showing us the T-line. It's dramatically improved people's percentage of returns as well as percentage of correct trades. So we're going to go through kind of the aspects of the T-line, and we call this an unfair advantage because there is one simple aspect to all this. The T-line is the 8 exponential moving average. And the reason there's an unfair advantage is because nobody has the T-line on their charts. I say nobody. The percent of, or the number of people percentage-wise out there do not have it on there. So if we go to the basics, everybody has the 200, the 50, and the 20-day moving average on their charts because that's what every major money manager around the world uses for their for making their decisions. This black line, the 8 exponential moving average, is what we call the T-line. Very simply, it's trying to shorten as much as possible. It was the trigger line, and the trigger line has a very simple description we'll get to here in a minute. And the T-line is fractal. It means it works just as easy, just as well in a 5-minute chart, a 10-minute chart, a monthly chart. So no matter what type of chart you're trading or what time frame, the T-line works very effectively. And so that boils down to, and this is probably the most poignant, I guess is the word I'm looking for, most important facet of candlestick analysis with the T-line. What is the T-line? Again, the 8 exponential moving average. So there's a very simple concept to this, that most of the moving averages that everybody has on their charts act like magnets because people aren't going to do anything until they see what happens once it gets to that level. So if it's starting to pull back to a major moving average, they're not going to be buying until it gets there. I see a lot of 9 EMA on status quo, a lot of charting systems. Is there a big difference? Nah, not really a big difference. So the major moving averages all act as magnets because the decisions are going to be based on when they get to that level. Oh, no, one of my email things. Sorry about that. So there's a very basic characteristic of a T-line because nobody uses it. And the fact that it's so highly effective kind of gives it the Fibonacci characteristics. It's kind of a natural support and resistance level of human nature. So this screen right here is going to be one of the most powerful concepts about candlestick analysis. Because if you know that the candlestick signals are the graphic depiction of human nature, where it's essentially graphically showing the actual sentiment between the bulls and the bears. And the T-line acts like a natural support and resistance level of human nature, kind of a Fibonacci characteristic. When you combine those two, you've got an extremely high probability, powerful trading system. So there's a very simple rule to the T-line. And the simple rule is if you see a candlestick buy signal and a close above the T-line, you can stay long until you see a candlestick sell signal and a close back below the T-line. That's about as simple as you can make trading. If you understand what the signals and patterns are telling you, and you understand that your trend will stay long as you close or don't see a sell signal and a close below the T-line, that takes a lot of anxiety out of your trading, and it improves your probabilities. It works just as well on the sell side, that you know your downtrend remains in progress until you see a candlestick buy signal and a close back up above the T-line. So this makes trend analysis very simple. You see a strong price move, this is what we call that 45 degree. You see a strong price move, very simple rule. You can stay long until you see a sell signal and a close back below the T-line. Or you see the change of investor sentiment when you get to a spot where they're coinciding, where you've got the T-line and the 50 at one spot. You know everybody and their brother's watching to see what's happening at the 50. When we see it gap down, we know exactly what to do after a doji in the overbought condition. We want to start taking our profits. And then if we see a close below the T-line, again, our simple rule, you stay short until we see a candlestick buy signal and a close back up above the T-line. So there's some very simple truisms that also are attached to the natural support and resistance level. The T-line can be used on any time frame, yes. I used to trade the E-minis off the 1 minute, 3 minute, 10-minute chart combination and did it very successfully. Now that I go back and look at it, I would have been tremendously more successful if I'd had the T-line on there also. So I used to make good money trading candlesticks. If you go back right to my very early days of trading, I was the worst investor in the world. I was even a stockbroker for 8 years and realized that the brokerage firms didn't have any more idea about what made prices go up or down than everybody else. You just threw everything in one pot. You're just looking for good quality stocks and you hold them long term, and that was how you made money. Well, I thought there had to be an easier way. I got out of the business, and when somebody showed me candlesticks, I kept thinking, this makes a lot of sense. So some very simple truisms about candlestick signals, and then them associated, not associated, but correlated with candlestick signals. One is the further away you move from the T-line, the higher the probability it's going to come back and test it. So if we start seeing buy signals in the oversold area, we know at least where our first target's going to be. Now somebody says, why not the 5 EMA, which is also a Fibonacci number? We're not trading the Fibonacci numbers. We're just saying that the T-line has kind of the Fibonacci characteristic. And the Fibonacci characteristic is that if you have an uptrend and it pulls back, the Fibonacci retracement numbers are usually the 31% level, the 50% level, or the 62% level. Those seem to be natural support or resistance levels depending on which way you're going. So we're not saying it's a Fibonacci number. We're saying it has Fibonacci characteristics, that it's a natural support and resistance level. Can I use the arrow pointer? I don't know. Oh, I don't know why it's doing that. What type of pointer do we have on there? Anyways, so if we can see, again, this is what we call convergence analysis. Are you saying the 8 EMA works better than the 5 EMA? Yes, I'm saying that. That's what the T-line is. And you don't have to take my word for it. Throw the 8 exponential moving average on your charts. Throw the 5 EMA on your charts. See which one works better. I'm just, again, after being the worst investor in the world, I've made tons and tons of money by being in the right place at the right time based upon candlestick buy signals or sell signals and the T-line. So again, the truism is the further away you are from the T-line, the higher the probability it's going to come back and test it. So if you know that probability and you start seeing buy signals occurring on a, say, a major support level like the 200-day moving average, there's a high probability they're going to come back up in that direction. And the T-line, or the 3T line, is the 3 exponential moving average, which will be a whole nother training process. But it becomes more effective as the further away you move from the T-line. The 3T line becomes a much faster indicator. But right now, let's concentrate on the T-line. The further away you move from the T-line and you start seeing sell signals, start taking your profits, because where do you think the first target's going to be? Back to the T-line. Is it going to support there or do a J-hook pattern? We don't know. We can always find that out at that level. All right, so with the T-line, you get different characteristics to it, like the T-line crunch. The T-line crunch is when you hit a resistance level or get near a resistance level. If they can't close it below the T-line, you watch it, they'll crunch it right up through that resistance level. That allows you to stay in even though it's at a resistance level, or if you took profits when it first hit the resistance level, tells you get ready to buy it back if it crunches up through that level. So that's the T-line crunch. There's a difference between a bobble and a T-line crunch. A bobble is the initial price moves up to that resistance level and fails. Then it's followed by another approach to test that resistance level. And then it comes up through that resistance level. So this produces a J-hook pattern or a bobble breakout. Now, I must have skipped one. There, I skipped this one. That's what happened. Once it hits that initial test of the resistance level and fails, then the price comes back to the T-line and won't go through the T-line. Then comes back up and tests that resistance level. And when it goes through, you've got a high probability J-hook pattern bobble breakout. So what we're looking for is, you can see all the moving averages, hits a major resistance level, pulls back to the T-line, does the bobble, goes up to the next resistance. Probably got some more clear charts. So the bobble is when it comes up based upon buy signals, hits that resistance level. We all know that there's probably going to be some action at a resistance level, like a 50 or 200-day moving average. But we can see whether that's a reversal or whether that was just profit taken at that level, where we can be buying back knowing that if it goes through this level, we've got a J-hook pattern in progress. So the bobble is different than the T-line crunch. The bobble comes up and hits the resistance level, pulls back, so we're taking profits. And there's your ultimate evening star signal. We don't know whether it's going to support here in the T-line area. Get out of the trade as fast as possible. And this all becomes very simple analysis. If we come up to a resistance level in the overbought condition, what do we need to see to affect the doji rule? Well, the doji rule is very simple. The price is usually going to move in the direction of how they open it after the dojis. The fact that they opened it lower told us get out of the trade immediately because they aren't going through the resistance level. Where do we buy back? When it comes back up through and does the bobble. And there's what we call the doji sandwich. It told us there was going to be more upside. So the doji sandwich is a bullish day, a doji, and then they move positive the next day. This candle and this candle are going to be the same magnitude, which tells us they are going to go through the 50. So if we can add all the little pieces of evidence by knowing what should happen after a doji sandwich, more upside, what type of price pattern is it going to do, a J-hook pattern, it just puts us in the right place at the right time with a high probability. So what we don't want to see is expecting a bobble, we want to get out right away because it may not support here. It may come all the way down here. Now we come back up again. Then we'll notice what happened this time. They couldn't get back down through the T-line. That told us we stay in the trade, or if we came out here, we definitely get back in when it comes up through that level. And now that's another element of investing that a lot of people have a hard time with. It used to be that if I got out of a trade, I wasn't going to let them trick me by moving it back up and letting me get back in and then turn it right around again. So I wouldn't get back in again. And as you can see, that was a huge profit after that. At least now I know what human nature does. This could be a daily chart. This could be a 5-minute chart. It's all what do I say? They're fractal. They work just as well on a 1-minute chart as they do on a monthly chart and everything in between. Because if you go back to the very simple concept of candlesticks signals, they are the graphic depiction of what is occurring in human nature. And that's the most consistent, what do I say, most consistent indicator in the world is human nature. It's been around for hundreds of years and will be around for the next few hundreds of years or more. So makes it very simple. Comes up. This was when resources a while ago. We were buying here on the kicker signal. Where was our first expected target? Up here at the 50. Take profits. It looked like it was time to get back in. Had they opened positive, again, there was our J-hook pattern. Next day they opened lower and didn't confirm. Next day they opened lower. We didn't get in this position because it didn't confirm coming up through the T-line area. I'm sorry, the 50 after bouncing off the T-line. So up here, resistance, we get out when it's time to sell. We get back in when it confirms that that was just a bobble pattern. Let's save. There's kind of your T-line crunch. The bobble doesn't necessarily have to be at a major moving average. It could also be at a resistance level. Anything that you can see, and that's the advantage, again, that we have with candlestick analysis, is we can graphically see where all the support and resistance levels are, and we can see what type of pattern and signal is occurring at those levels. So if we're getting out here because it looks like it's resisting, we could definitely be buying here. Now, remember, we've gone through lots of trainings showing people that the best buy signal is when you're in the oversold condition, and because very simply the Japanese rice traders told us if you see a candlestick buy signal in an oversold condition, the probabilities are pretty strong that it's going to be in an uptrend. Well, there's our left-right combo, a doji followed by a bullish engulfing signal. Why would we be buying up here if our stochastics are in the overbought area? Because the pattern is telling us there's a J-hook pattern about ready to break out. They couldn't close below the T-line. If this is wave 1, where do you think wave 3 is going to be? Same magnitude as wave 1, which tells us we're at least going to the 200, if not further. Human nature. Okay. Again, there's the bobble. Fails, pulls back, doesn't really close below the T-line. You can always buy it back coming up through this area. Just a very high probability trade setup, and the T-line is your factor. So we recommended EPE the other day right here because there was our little left-right combo. If it opened positive after a left-right combo, what was it doing? Number one, it was telling us the T-line was going to act as support. Number two was confirming that the left-right combo was going to be a confirmed buy signal. And number three, if they came back up through the resistance level, we obviously have a J-hook pattern setting up. So this one, you still can be buying on positive trading tomorrow. So the T-line crunch versus the bobble is that the T-line crunch doesn't necessarily ever get up to the resistance level. but you can see how the T-line just keeps crunching it up right through that resistance level. So anytime I see a setup like this, where I may have bought down here, I'm just going to stay long. And what do we usually expect once we get up here to a major resistance level? Some profit taking. But if they can't get it back below the T-line, we know to hold on to it because it's more than likely going to push through that level. T-line crunch pushes up, and notice what happened right here. Again, this is why knowing what each signal illustrates for you, if we know the simple rule of doji, and we have a doji right smack dab on the resistance level, what's our simple rule of a doji? It's going to move in the direction how they open it after a doji. So it made it very simple. If it opened lower, the next day we were taking profits. If it opens positive, we have a doji sandwich telling us we're heading for the next resistance level. Okay, a silly question. But when we talk about the T-line, do you mean trend line? The T-line is the trigger line. We just shortened it to the T-line. Yeah, it's the trigger line. It basically says if you see a candlestick buy signal and a close above the T line or the trigger line, that triggers your that's more confirmation that you're buying. And don't Robert, no silly questions in here. It's these are all questions that people are asking constantly or always having in their heads, so don't be afraid to ask questions. This is why we have our chat rooms, is so you can ask these questions. A left-right combo is a doji followed by a bullish engulfing signal. So again, the T-line crunch doesn't necessarily have to be one of the major moving averages. It could be a resistance level. But if they're crunching up through what you can see as an obvious resistance level, that's when you want to be buying. My stochastics are 12-3-3 slow stochastics. Now, a lot of people ask, do you wait for the stochastics to cross? And the answer is no. We're not trading stochastics. We're seeing what type of signals occur when we're in the oversold area. All the stochastics do is tell us where we are in that trend. Obviously, a candlestick buy signal in the overbought condition doesn't mean very much. Or a candlestick sell signal in the oversold condition doesn't mean very much. Candlestick buy signal in the oversold area means quite a bit, and candlestick sell signal in the overbought condition means quite a bit. The little green line is the 3T line. Again, that we use once we get further away from the T line, it becomes more effective, and that's a whole different training session. What is your search to find these stocks? Very simple scans, Joe. We show people how to set up their scans, whether you're using TradeStation, Thinkorswim, Metastock, Warden Brothers, Ninja Trader, I forget all the other ones, but all our formulas are out there, and the signals and patterns are very easy to formulate, and our formulas are out there with everybody. So once again, if you can't close below the T-line, notice our fry pan bottom, and it breaks out through the resistance level. Notice what happened on the T-line. They couldn't get it back below the T-line. Same scenario here. That T-line crunch pushed us right up through that resistance level. John, it doesn't matter which platform. They are all good or as bad as each other. And that's not a question for me. That's a question to ask in the trading room, because everybody's using different platforms and you can get their opinions of it. So somebody was asking the difference between a bobble and a T-line crunch. A T-line crunch is a slow, steady move up to that resistance level. A bobble is when you come up, you hit the resistance level and you pull back, you take your profits, but when you notice they can't close it below the T-line, then notice how the T-line crunch takes effect. You can be buying back here because now you have a bobble breakout, which also corresponds with being a J-hook pattern. Uh, Peter, I usually wait for if the first day it comes up confirming the buy signal and closes below the T line, above the T line, then I'll look and say, all right, I want to see confirmation the next day. On the other hand, if you're a good fur piece away from the T line, remember the number one criteria for buying and selling our candlesticks is the signals themselves. So if you're a good distance away from the T line, and then you see a candlestick reversal signal, whoops, oh boy, that's not what was supposed to be coming up. Oh, I forgot what I was saying. Oh, if you're a good distance away from the T line and you see a buy signal, now you know that your first target is back up to the T line. So the worst case scenario is if you buy on a signal and it bounces up to the T line and fails, at least you're probably getting out with a little bit of a profit, even though the full trade didn't work. Yes, and there'll be some points where you buy on a close above the T line or below the T line, and sometimes you wait, or sometimes depending on the chart pattern, you close as it comes back down through the T line. And the difference would be is what type of patterns. Yes, and this is being recorded. The J-hook pattern looks like a J-hook. I'll get to that again. You can either, I think they're already, all the formulas are already at TradeStation. So again, here's the kind of, here's what a J-hook pattern looks like. A J-hook looks like a little hook where it comes up, pulls back, doesn't close below the T line, hooks back up and comes up to the next place, does that bobble again, and when it comes up through this level, there's your next J-hook pattern. So there's expectations with the T line. Very simply, you stay long as you doesn't close below the T line, and if you hit a resistance level, take profits and see what it does at the T line. Can you use the T line crossing the 20 and 50 as a signal? No. Use the candlestick signals. Everything else is just confirmation. You can always trade the crosses that you want to, but you're going to be well late on that trend. We're trying to find the absolute bottom. There's your left-right combo, kind of a doji hammer followed by a bullish engulfing. The next day they gap it up a little bit through the T line, and then you have your doji sandwich. You can just very simple analysis of each of the signals and patterns tells you how long to stay in each trade. If it closes under the T line, but get back after it warns you that the trend is weak. Yes, if it closes below the T line, just very simply stated, the probabilities are it's time to be out of that trade. What's the worst case scenario? You're coming out of the trade, you probably got a good profit, or it's at the top of the overbought condition. Worst case scenario is you come out and then it comes back up above the T line. You can always get back in. So that comes out to a very simple equation that if this was a 10-point move and I only got an 8-point move out of it, like getting out when it was time to get out, getting back in, getting out, getting back in, at least I know my correct trade ratio is going to be extremely high, and that's going to produce a very strong compounding effect. Is it safe to enter the stock if it crosses T-line second time after the candlestick signal? Probably. I'd have to look at an example. What point of the J-hook? Depends on, again, that's a different training. And let me get when I come up with a T-line or a J-hook pattern, I'll show you when to get in. How do we get the scanner for TradeStation? Body man, I would just look at, it should be on there somewhere. I don't actually, that might be a link. Somebody might have the link for it. Do you trade only certain stocks? No. The nice thing about the simple scanning techniques of candlestick analysis is out of the 10,000 trading entities out there in less than 20 minutes each day, you're going to be able to find the best trades the next day, no matter what stocks. Now, if your trading universe is that you only want stocks that are optionable, you use that as your trading universe. If you only want stocks that are optional above $50, that's your trading universe. If you want to trade stocks that are $1 to $5, that's your trading universe. So I scan for everything above $5 anyways. The reason for that is I know that every time I put on a trade with a candlestick signals, the probabilities are in my favor that I'm going to make money. So I want to get as much leverage as possible, which means I want to be able to margin that stock. William, I don't necessarily scale out. I might take off half the position if I'm in an overbought position and I'm way up above the T line and I see a sell signal. If it continues up, I'm still in a half position in a high risk area. If it trades lower, I come out of the other half. You always close a position if it closes below the T line, even if there is a strong trend. No. If it closes just below the T line after being in a strong uptrend, my criteria is it has to open positive the next day to stay in it. If it opens lower, then I close it out. Will you be showing your scan criteria? Oh, not here, but it's all very simple. As a matter of fact, all the formulas for the signals are on our website. I think underneath Warden Brothers TCNet, they're all written out. All you have to do is copy and paste them. The T line is the 8 exponential moving average. Okay, so they work for all time frames. So it doesn't matter whether you're trading off a 1 minute, 5 minute, 10-minute chart. It all works the same way. And the 3T line, this could be a 5-minute chart. This could be a monthly chart. And the further away you move from the T line, the higher the probability it's going to come back and test it. That's where the 3T line, we go into trainings on that. So it also helps our trend analysis. So if I'm in a steady uptrend, I want to see it close below the T line. Now, if it just closes below the T line, the next day has to open positive. If it closes below the T line, I can come out, but I can always get back in when it comes back up above the T line, because that tells me this was just a pullback, and now it's time to get back in. I will close out the trade because, again, the probabilities are that if it closes below the T line, it's got downside, more downside probabilities. But if it comes back up after a buy signal and it closes above the T line, tells me I've got more upside probabilities. My favorite time frame, John, I trade stocks on a swing trade basis, meaning my trades usually last anywhere from 2 to 10 trading days. If I'm trading soybeans or cattle or the dollar or the crude oil, I'll usually trade off the 10-minute chart. The 3T line very quickly is that if we've moved too far away from the T line, the 3T line now becomes more effective. We don't want to see a sell signal and close below the 3T line because that means it's going to come back and test the T line. Going with the question a minute ago, if somebody is trading, say, the 15-minute chart and it closes below the T line, would you get out on a shorter time frame? No. If you're trading off the 15-minute chart, that's because you're using that as your bellwether that you've discovered that a trend will stay in existence as long as it doesn't close back below the T line or the 15-minute T line. So you're not trying to change your criteria as the trade goes on. You're saying, all right, I'm trading the dollar, and as long as the dollar stays above the T line on the 15-minute chart, I'm going to stay long. Mario, if I enter a position, yes, I've got a good idea where my stop is going to be, and that's a great benefit of candlestick analysis also, is for 40 some odd years, I've heard every money manager tell you to cut your losses short and let your profits run. The only problem is they never tell you how you cut your losses short and let your profits run. With candlesticks, it's very simple. The Japanese rice traders have very simple rules that if you see a buy signal, there should be expected results. And there's very simple stop losses. If you see a buy signal, and let me pick out one. Say you saw this buy signal, and it should be confirming the next day. But if this is a signal that told us the bulls were in control, where should it not close? Well, the Japanese rice traders say if the bears can close it back below the halfway point of that candle, that means the bears are still in control. Get out of that trade. Other webinars with other apps work fine. Okay, I don't know what. How do I contact webinar to Doug? I don't know that either. I guess you probably have to email him somehow. How do you measure a target price? That's a whole different concept, but we can see how you can measure a target. If we can see there's a trend channel and we can see there's a buy signal at the support level, that's at least our first target is up here at this resistance level. And how long does it tell us to stay in? As long as we don't close below the T line. Well, we can start seeing what's happening up here. Either they're going to reverse it, or we've got noticeably this T-line crunch in effect. So that might tell us, all right, we don't get ready to take profits up here just yet until they actually close below the T-line on the confirmed sell signal. We hold on to it because this time they might be going through that resistance level. So what happens intraday is of no consequence. That's right. Everything during the day is noise. The candlestick signals are the Japanese rice traders based it on if it opens here and closes here, it creates a bullish candle. If it opens here and closes below where it opens, it creates a bearish or a dark candle. Everything in between doesn't mean anything. The T-line is better than the Akachumo cloud. The T-line is very, very effective, but you can also add the cloud to your chart to get a better reading of where the prices should move or not move to. Let's see. Can a T-line be used for equities? T-line can be used on any chart. Candlesticks can be used on any chart. Remember, candlesticks are not a measure of any trading market. It's the measure of human nature. And any trading entity that you have fear and greed in, which is everything, they work very effectively. You buy, yeah, I usually do most of my buying within the first 45 minutes of the day. I'll look to be selling usually probably 80 to 90% of the time I'm buying and selling within the first 45 minutes and selling within the last 20 minutes of the day. Yes, I made very good money trading oil on the way down. And right now we're long oil, trading it on the way up. William, the open and close are the important factors. That's what creates the candles. If it opens here and closes above where it opens, it creates a green candle or a white candle. If it opens here and closes below where it opens, it creates a dark candle. Now, that doesn't necessarily mean it's up or down on the day. It tells you what's happened after the open and the close. And so the important elements of a candlestick signal is the open and the close. The shadows are just the range during the day. So again, here was a trend. Couldn't close below the T-line until we had our evening star signal and a close below the T-line. That told us it was time to take profits. If you can see a consistent trend, there might be times when you get out, but since you already know there's a trend and they turn right around and come back up, you can buy back in. That ensures that you're not getting out or not getting out and holding it all the way back down. Yes, if you come back down below the T-line without a candlestick reversal signal, I'll give it another day. It needs to come right back up again. Wave 1, wave 2, and wave 3 is nothing more than knowing that prices move in waves. So this to me would be wave 1, wave 2, wave 3. Then when I got up here and pulled back and came back up, now this becomes wave 1, wave 2, wave 3. That's why I did today on AU, but got stopped out by 1 point. LC, that's another thing we train people on is your playing field is prices move around. You put your sell stop where you think it should not be trading during the day or during whatever time frame you're trading. Not on the basis that they could get there, but on the basis that if they got there, apparently the price isn't doing what it's supposed to be doing. And there are going to be lots of times, I say lots of times, there's going to be times where you get stopped out, heads down further, or it hits your stop and heads back up. You have to look at the chart and say, all right, what should I be doing now? Should I be buying back in or should I be leaving this one alone? Are you saying the body of the candle is much more important than the wicks? Yes. The important factors of the body is it shows where it opened and closed. Those were the beginning decisions and the final decisions to create that candle. The wicks are just the trading range. Now, the body in conjunction with the wicks, the wicks are going to tell you something, and that's why the different signals. That's why a doji has the tails to both sides and a very small body. You said you usually buy the first 45 minutes of the day. Do you wait at least 5-10 minutes? No. William, we do a entry and exit strategy. Again, very simple rules with candlesticks is if we see a candlestick buy signal, we know what we should be expecting the next day. Bullish confirmation. So what we don't want to see is if we saw a nice bullish signal, let me see if I can get to one, and it opens much lower the next day, that's telling us the bulls aren't there. We don't want to be buying just yet. Yes, the wicks do tell you information. Stochastics are 12-3-3, slow stochastics, and that's not anything set in stone. Just one night I sat down and said, where would the stochastics be at the bottom and the top to confirm the chart pattern? And for me, swing trading 12-3-3 seemed to work the best. So on big price moves, this could be off a 5-minute chart where you saw a big reversal. That big move, you could stay long. Now, back to if this was our big buy signal, what do we want to see the next day? We want to see buying. If it had opened back down here, that's not confirming our signal. We don't buy unless it comes right back up through the previous day's close. So there's very simple entry and exit strategies that improve the probabilities of being in the right trade at the right time. Mario, after we get done here, we'll go to live charts, so ask those questions at that time. Proportion of upper wick to lower wick size. Yes, there'll be information, and we can go through that. Volume isn't that important to me. The only time volume becomes a critical factor is, say, right here, there's huge volume. Either that day, or that day. It basically tells us there's been a lot of change of investor ownership. which is usually occurs at the reversals. A lot of people say, well, I want to see the volume go up as the price goes up. Volume and price have absolutely nothing to do with each other. If nobody's willing to sell you the stock, that price is going to go up on lighter volume. So we're not buying price. We're buying the, we're not buying volume. We're buying price. What is the lighter black line on your charts below the T line? Oh, the gray line is the 20-day moving average. In your book, I don't remember what the first part of that statement was, John. What if the signal comes the third, do you get in? What if the signal comes the third? Oh, you'll have to restate that, Gerald. So the sell stop you set at the time you buy is well below the T line, or just as a safety measure in the event of a dramatic, unexpected drop. Usually if I've just bought, because this is my buy signal and it's confirming, I'll set my stop at a close below the or below the halfway point, which is also back below the T line. Now, if it closed at just below the T line, then I've got a very simple strategy. It has to open positive and trade positive the next day. If it opens lower, it's pretty much telling us they aren't going up through the T line. No. If a reversal signal occurs taking you down to the T line, I don't short it, because just because a uptrend is over, it doesn't necessarily mean it's a good short. I'll wait to see if it closes below the T line. Or if it's a strong signal and closes below the T line, I'll see what it does the next day to see make sure that trend is over. The 20, the 50, and the 200 are all simple moving average. What if the T line is flat? That means your price is flat. You probably don't want to be trading that whatever is trading. Some people ask, well, what if it's wobbling back and forth above and below the T line? It means it doesn't have any real good direction. Go to something else. The nice thing about being able to scan each night is, in my case, in less than 5 minutes, I'll be able to pick the best 2 or 3 trades for the next day, or 4 or 5 or 6. So that means if I've got a position on that's not looking real good, I don't have to stay into something that's iffy. I can close out that trade and move on to something that has high probabilities to it. Let's see, how far along are we? I'm going to keep going here. If I'm not skipping anybody's questions, I'm just trying to see what else we got here. So if I see an initial big move in the morning on something, and then I can see for the rest of the day, they aren't really, it's not a, what do they call it, gap and crap type thing, but they really aren't selling it off. I know that I can stay long on this because there's nothing on the 10-minute chart telling me that that big price move is backing off. Or if I see a big move in the morning, and then for the rest of the day, they stay above the 10-minute T line, that just tells me to stay long in that position. If I see the market open up in the morning, and we know that the Dow's in an uptrend on a daily, and we see in the morning they sell it off, we want to know whether that's a sell-off, which is normally occurs. Remember, in an uptrend, they'll usually sell it in the morning and buy it back in the afternoon, and we can see when it to start to come back in. So if I'm ready to buy a strong position or a stock that had a good bullish position and the market is down, I may not start buying that stock until I see definitely they're starting back up again. Then I can come back in. Third day, you still get in. Oh, if it, I now don't remember the beginning of the question. I'll try to answer these questions as we get to the live charts. How long do you wait before buying? There's That's another session that we do on entry and exit strategies. You've got a simple grid. There's either the market's opening up strong or opening lower. If it's opening up strong or opening positive and the stock that you were looking to buy after a buy signal is opening positive, I'll usually buy it within a minute or two. If the stock is opening strong and the market is opening down, don't have to jump in just yet. I'll wait to see whether they're still buying even though the market's down. If the stock is down and the market is up, I'm not buying because it didn't confirm, but I'll watch to see if they bring, after that lower open, if they come back up through the previous day's close, which obviously now is forming another bullish candle, confirming the previous day's signal, then I'll start buying. Now in the fourth part of the grid, if the market's down and the stock you're looking at is down, it means you're not buying that day. You just sit. Again, so if I see an early morning gap up, I want to see what it's doing on the 10-minute chart on a shorter time frame. And it also tells us when to take profits. Remember our analysis. The further away you move from the T-line, the higher the probability it's going to come back and test it. So is this too far away or is this too far away? Well, that's very simple. If we start moving too far away from the T-line, we flip to our 10-minute chart. As long as our 10-minute chart says that, we're not really doing anything drastic. We stay long. So that would be after the first day. What happens after the next day? Well, still a good distance away from the T-line. Moves up and then comes back down. We might close out the position. However, notice what happens on the 10-minute chart. Comes right back up. We're buying back in. Why would we be doing that in an overbought condition? Because what do we know about this pattern, a fry pan bottom? There's going to be a very strong price trend. So we may have gotten out of it, but we'll get right back in until we see a definite sell signal. Whoops, this is enlarged a little bit. We got out of it and then got back in right here. So anytime we see that parabolic move where you're moving way too far away from the T-line, we simply start moving to our 10-minute charts, say, all right, everything's good, except now on our 10-minute chart, with our daily chart way up in the overbought condition, the 10-minute chart's starting to show selling. That means we're taking profits up here. And if we want to be a little bit faster, we go to our 5-minute chart to see if it's going to confirm the 10-minute chart. But that means that we're now coming out up here versus back down here someplace. Are you able to swing trade off the T-line in these markets? Definitely. Yep. Been a good market here over the last few days. All right. Whoops. I scrolled up and Douglas, on the Forex markets, you don't need to scan. You've only got, what, 6 basic trading. You can look at those charts within, you can visually scan those charts in a matter of a minute. So you don't have to go through any big scanning process. So if I see something like this where the pattern is working, there's your kind of little slow curve breakout, when is it time to buy? Here, here, or here? Well, I just go to my 10-minute chart. If I'm looking at the chart right here, I'm saying, no, I'm not going to be buying right now because it's pulling back. If I'm looking at the chart right here, I'm saying, yeah, I can be buying. It didn't close below the T-line. Right here, I might, if I looked at it right then, I wouldn't be buying. But if I look at this chart, I can see they aren't selling it below the T-line. They're still in an uptrend. I can be buying. Does that mean at some point it might come back down later? Could be, but right at the time I'm buying with a big breakout, I'm buying at the time that at that time it's a good place to be buying. Organic eyeball scanner. Do you get in on a confirmation after a buy or sell signal immediately as fast as possible? Somebody asked me the other day, how many days does it take for you to show that there's been a reversal in your trend? And the answer is 0. If you see a candlestick buy signal, that's the whole reason that we're identifying the 12 major signals or the 6 or 8 patterns to know exactly what should happen on confirming of those signals. We're buying immediately, which does two things for us. One, puts us in very early on a move to the upside, or two, if that signal failed, we're right back out with a very small loss. We're not waiting 3 or 4 days or 3 or 4 time frames for it to confirm that the reversal has occurred. So right here, I might be buying, I'd be back out. I might be buying right here. I might be getting bored here, but as soon as it broke through the 50, that told me, and again, this was probably on a 5-minute chart or a 10-minute chart. So anytime I see these big price moves, I know there's going to be consolidation. This is what we call kind of your J-hook pattern again, but notice what it was doing. Not only was it not closing below the 3T line, it wasn't able to close below the T line. We just stay long until we see that sell signal. So anytime we see these big price moves and we see the profit taking, we can see when the profit taking's over, knowing what our next pattern setup is going to be, which would be basically a J-hook. So the T-line is just very simple on any of the signals or patterns that we use for trend analysis. But if we see our signal and pattern breakout, like we saw in VRA not too long ago, notice what happened at the resistance level. A doji gap up, your best friend. Tells you there's going to be a strong price move. How long do we stay in this? Until you see a candlestick sell signal and a close below the T-line. If you see that big price move, you know we're going to be in a 45 degree. That's just kind of a steady uptrend until we see a candlestick sell signal and a close back below the T-line. So that's how we kind of fine-tune our executions with using the T-line and the candlestick signals. And I think we've got a special on all this. What do we have with it? Yeah, we got an unfair advantage training video and eliminating emotions ebook. And that's one of the big aspects of candlestick analysis also, is that if you know what the probabilities are based upon, I'm just going to throw this in here, you can take a look at it. In a few minutes, or in a couple of minutes, I'll flip over to live charts so we can go through the live charts, and you're going to be pretty much see what the analysis is of what positions to be in based upon just using the signals and patterns. They work every single day. You use the Fibonacci numbers, Tony, not as a buy or a sell criteria. I use them just like I use the moving averages or trend lines to be able to see what type of signals are actually occurring once it gets to those levels. If I know a retracement back to the 31, 50, or 62% is possible after the recent uptrend, and I'm out of the position, I can see whether I want to be buying back by having putting all those potential support levels on the chart to see what type of signals occur when they get to those levels. Is it wise to wait for the candlestick buy signal for the stock to come back to the T-line and buy the stock for safe entry? No. A lot of people say, and that's kind of the misnomer of a lot of people. The price is moving. It's a good-looking chart, and what do they say? Oh, I'm going to wait for it to pull back so I can get in at a better price. Now think of the logic of that. You've got a strong price move that you want to have moving in the right direction, but you want to buy it when it's pulling back. And what does it mean when it's pulling back? That means the sellers are there. So why do you want to buy a stock that doesn't have a strong price move? It's showing that sellers are there. Number two, you're thinking in your own head that you've got the immaculate inception execution process that as soon as it pulls back and you decide to buy, as soon as you buy it, it's going to turn around and go back up. I would rather be buying in strength, knowing after a buy signal, it's going in the direction it's supposed to be going. Okay, thanks, John. Okay, so again, I think they've got a special, and it's probably very well priced. I don't even know what the price is of it. And a lot of people ask, well, why do you discount your stuff so much if it's good stuff? And the answer to that is, when I started learning candlesticks, I would ask rhetorically on the chat rooms, why isn't everybody, thank you, Mario, why isn't everybody using candlesticks? It just makes so much sense. And that's the big element of candlesticks that have always intrigued me, is that it's just merely common sense put into a graphic depiction. There'll be, whether you're reading the books or going in our chat room every day, when you look at the charts and you understand why it's moving, you basically say, yeah, that makes sense. And that's what I did anyways. I said, that makes sense. That's stuff I already knew, but now I can see on a graphic, okay, 17 bucks. Yes, we usually price things at 17 bucks. I think the normal video is like 147. But so the long answer to what I was just starting on is that the reason we price it so low is because a lot of people say, yeah, I know what candlestick signals are. They just don't work all the time, and there's too many of them to learn. And so I kept going through the thought process. If there was too many, or if they didn't always work, we wouldn't be looking at them today. And Wall Street has a very simple rule that if something isn't working, it disappears very quickly. So, and the other one was, yeah, there are a lot of signals. There's 50 or 60 candlestick signals, but we've narrowed it down to 12 signals, which we call the 12 major signals. Andrew, there isn't any most powerful. The kicker signal is probably the strongest, but they're all strong signals. The 6 buys and the 6 sells out of the 50 or 60 that we cultivated through the years is very simple to understand. They occur quite often, probably 99.99% of the time. And if you understand where they work and why they work, and that's what the Japanese rice traders produced for us, was not only visually telling us where they work, but also telling us what the investor sentiment was that created them. Once you understand that, you've got a good grasp of what makes prices move. And I always tell people, prices do not move based upon fundamentals. Prices move based upon the perception of fundamentals, and that's all candlestick signals are. Body Man, I've written 3 books on how to use candlesticks. They're not sophisticated. They're very simple to read. Yeah, and it basically tells you why the signals work effectively in each spot. All right, let's do this. I'll keep answering questions. Jim, I'm going to turn off the projector for a second. I'll bring up live charts, and we will go through live charts, and you'll kind of see on a live chart basis why everything is still on the same logic. Let's do this. Let's do this. For those of you that are new here, we do this every night. Try to keep your questions down to 1 so that we can get everybody in, but I'm going to probably get to the best ones here first, meaning the ones that I've picked out that seem to be the best. All right. Now, again, remember, this is all on the basis that when I first started learning candlesticks, I was the worst investor in the world. I just so greatly wanted to be an investor. I was a stockbroker with Kidder, Peabody, Cowan and Company, and Oppenheimer for 8 years, and just realized that there was nothing out there that you could really get your teeth into as far as how to use or how to make money. The only people that made money were the rich people. I say rich people, the wealthy that could just buy stocks and hold on to them for years. Well, I needed the money now. I needed the profits now, and so okay. Somebody was asking about crude oil. Got to remember what was happening in crude oil. And this is why prices do not move based upon fundamentals. Prices move based upon investor sentiment. You can see what crude oil did. It was heading all the way down, and when it started getting down in here, remember what was happening to the market? The market was selling off because crude oil prices were heading down even further. No charts showing. That's just a fine howdy do. Okay, sorry about that, everybody. Just what my mother always said, smile, things could be worse. And sure enough, when I smiled, things got worse. Okay, this is what we were talking about. Remember when crude oil was heading down? Didn't affect anything until it started really going down. And then everybody's saying, oh, man, crude oil, that's bad for the economy if the crude oil is going down that low. So that brought the whole market down. A while back, if crude oil is going up, that was bad for the market. Now, if crude oil was going down, that was bad for the market. So a lot of people will say, well, the prices go one way and this will affect other prices. The answer is depends on what the psychology is at the time. So as we saw, crude oil started back up when it did a bullish engulfing signal, came down and did a double bottom, did a kicker signal. The kicker signal is your strongest signal. Opened here and closed here. Let's make this even bigger. And then they opened at or above the previous day's open and went the opposite direction. Then you had your T-line crunch. Now you have your J-hook pattern, and your next target is more than likely going to be up here at the 200-day moving average. And notice what type of pattern you've got going on here, a big fry pan bottom. So right now we're long crude oil. Now, what's that doing to the markets? The Dow did a double bottom. And notice what's happened on the Dow this whole way up. They haven't been able to close it below the T-line. Same scenario on the NASDAQ. Started gapping it up from the bottom. Notice what they haven't been able to do. Even on bad days, they were able to close it right back up to the T-line. I would suspect, remember, when they will fill gaps. There's gaps up here. More than likely, they're going to bring the market. So if we can analyze that the trend of the market is in an uptrend, and things like crude oil is in an uptrend, then we can start going to individual charts and say, all right, Whiting started buying it down here at the 450 level, now trading at 910. And it looks like it still could be going higher off the J-hook pattern. And again, why does this look like a little J-hook pattern? Notice what this is, a doji followed by a gap up above the T-line. Remember, a doji followed by a gap up is your best friend. We call it the best friend because not only is it going to probably be in an uptrend, it's going to be in a very strong uptrend. Let's see what else I have here. Yeah, EPE we recommended the other day because there was your left-right combo. Somebody was asking earlier, what's a left-right combo? It's a doji, which is a day of indecision, followed by a bullish engulfing signal, which is very decisive. Notice how this came up out of the slow curve up through the T-line, and it popped from 2 to 6. Now it's doing a J-hook pattern. And this makes for a very simple entry. What's our simple rule of a doji? Remember, it did a doji today at the 200. If it opens positive, what type of pattern is it going to set up? Well, first of all, we know the rule of the doji. It's going to move in the direction of how they open it after a doji. And secondly, if this is our bullish candle, if they do another one of that same magnitude, doing a doji sandwich, they've broken out to this level, putting us into a J-hook pattern. Let's see. We're recommending BBG. Oh, we recommended it today. There was your J-hook pattern. Again, a doji. And where did the doji occur? Right smack dab at the same level on its high before. So if this opens positive, pretty much tells us wave 3, which is wave 1, that magnitude is still in progress. Could that be a flutter kicker in the... no flutter kicker that I can see. There was a kicker signal. Just kind of a J-hook pattern right now. If you see a kicker signal, oh, there it is. That's a kicker signal. A dark candle in a downtrend, and the next day they open it at or above the previous day's open and go in the opposite direction. That's a kicker signal. That pretty much tells you that the investor sentiment has been kicked in the opposite direction. This is the SPY, the S&P 500, and notice what it's done. Stayed right above the T line the whole way up. How did it start? Here's your best friend, Doji, gap up. The rule of the Doji. Which one were we looking at? EPE. Rule of the Doji is, remember, Doji is indecision between the bulls and the bears. If they open up positive, it tells you what their decision was. They're going positive. That's the simple rule of the Doji. It's going to move in the direction how they open it after a Doji. So if it opened positive, we're expecting a Doji sandwich. The next candle will be the same as that candle right there. Now, if they open it lower, it tells us we're still stuck in the sideways trend. We're still kind of in a bobble formation. And all right, so let's run through a few of these. This is the crude oil ETF. Whoops. You can see the fry pan bottom, the cup and handle, the best friend signal, the breakout. I would suspect coming out of this pattern, you could have a very strong price move. There's gaps to fill up here. We're expecting, or I'm expecting, crude oil to come back up. It wouldn't be on here, but I'm expecting crude oil right now on the on this chart to come up to about the $45 level, the 200-day moving average, which means these oil stocks should be doing quite well over that time frame. We also recommended WestRock. You can see how it did the bobble. Came back up, kind of a little kicker signal. Your fry pan bottom, your cup and handle. How long do you hold on to this? So you see a sell signal and a close back below the T line. Yeah, I think it's the May contract. I goofed that up. May contract is the K. And you can see kind of the J-hook pattern here also. Let's see. Senta, after the piercing signal, bottoming action, J-hook pattern, you could be buying this one. Again, this is putting the analysis of all the things that are occurring in the Miles. Be patient with the program. They've got a track record of showing with off the signals. It only takes one or two big trades, and you'll be very happy with the program. It's all the small trades that you get in and out that don't work. It's the ones that do work that can create some very big moves, or big profits. So notice what happened. They opened it down here. They couldn't close it below the T line, did a belt hold type signal. You're still in an uptrend on VRA. We recommended Watt. I don't think that's a... anyways, Watt did more of a doji gap up. You stay long on this one. And we're looking at TEX, T-E-X. This is why you want to see what type of signals you're having. There's a big bullish engulfing, stochastics coming back up, and you can pretty much draw a trend line right through the tops here. It's broken out. If this opens positive, you still have the possibility of a double doji sandwich, another big move like this. And we recommended APC the other day. Again, notice what happened, curling back up, a hammer, gap up. Where's the next likely target? Up here at the 200-day moving average. What did chart bonds, dollars? The dollar is that now on the dollar getting hit. And this is, I don't know where the 200 is. But you can see when it failed up here at the 50, they just cannot get it back up. And here's something you always want to keep in mind. Remember what the nature of a doji is. Pretty much indecision. So even in a downtrend, when they start bringing it up and it's kind of indecisive, you still want to make sure they can get back up above the T-line because there wasn't any real decisive trading. They slammed it again. It looks like the dollar is down some more tonight, which obviously means the euro still trading back up. So I wouldn't doubt if they don't come up here and test this level, which they're getting close to. Oh, and the nice thing about the chat room is you've got 160, 190 people out there all coming up with good chart patterns. Here's our classic. There's your kind of your scoop fry pan bottom. Hit the first target, the 200. Hold back, and you notice what it did. It hasn't been able to close below the T-line. There's your bobble. You can be buying this one because if this is wave 1, wave 3 is going to be the same magnitude. So you can pretty much calculate what your price move could be, which is not only beneficial to see whether it's a significant price move to be in that trade, number one. Number two, if you're putting on a spread and you know what your upside potential is, it makes it much more effective to be buying one call and selling another call at approximately where the price move is going to be. Just improves the probabilities. Ivory Coast, email Abraham at candlestickforum.com. He'll get you in. And gold, as you can see, is trading back up after hours. But after they took it down, they actually closed it up here the other day. But this is the difference between the outcry and the electronic trading. The electronic trading closed gold up here, and I think that was right after the Fed meeting. So that also means things like Nugget, which is the triple leveraged gold miners, came back up with a big kind of Morningstar type signal. Right now you can stay long with the anticipation that the prices are heading higher. We're still long SA. Started buying it down here. Want to see it get back up above the T-line. And AU, another one that we're staying long as it stays above the T-line. What else do we got here that of great consequence? These are all good charts. Harry, we could see immediately that prices were moving. I jumped into gold on an intraday basis. I'll see if I can pull it up here again. But here's G and W. There's your J-hook pattern. And what's the trading strategy? There's our doji. It's going to move in the direction how they open it after doji. So if they open it positive, good probability they're going to break out through here and be in wave 3. Yeah, Eros was a good chart that somebody, David L. Picked out. This is, notice how They did a left-right combo right here on the T-line and then slammed it up through the resistance. We just stayed long on this one until we see a sell signal. Owens, Illinois, another one with a bullish engulfing signal and a breakout. Now you can kind of project where everybody is. This is supported on the 50 with dojis and a gap up. They couldn't get down through the 50, so where do you think your next target's going to be? More than likely up here at the 200-day moving average. So what I was saying is with 160, 190 traders in the room, got a lot of people that know what they're looking for based upon the charts. You come up with a lot of good ideas. This is EMES, another nice J-hook pattern. And why is it a good J-hook pattern? Because they pulled it back and they did the bullish harami, which told us the selling has stopped. And today they gapped it up a little bit right at the T-line, went positive. That's a pretty good indication that this wave right here and this wave right here are going to be approximately the same. KGC was another one of the golds. Still will be buying this one, especially if it comes back up through today's open. That tells us they're breaking out through here on a J-hook pattern. Can you pick out the good stuff, or is it mayhem? No, Terry, you've got 160, 190 people sitting in there. 90% of them just sit and watch or ask questions, but you'll pick out the few people that when they come up with a chart, you want to take a look at it. And that's another thing too, Greg's pointing out. This isn't a chat room where it's a food fight. Everybody's very helpful, and we kind of keep it that way. One of the hardest things to do, not only learning how to invest by analyzing the charts, but also controlling your own emotions. I mean, I still have problems with that even today, but the biggest benefit that I have is the knowing what the probabilities. I've looked at so many charts thinking, oh, I wanted to do such and such, but the chart is telling me different. Got to do what the chart tells you to do. H or BH, if you'll here, anybody that would like to have a trial, I think there's little trial packages. Oh yeah, the $17 one probably tonight has the 30-day free trial. So what did I look here? HLX, another one. Where do you think the next price target is? 200. Why? Because you've got a J-hook pattern, your classic, a fry pan bottom. And what do we expect coming out of a fry pan bottom? A very strong price move. What do we expect from a J-hook pattern? The prerequisite is a very strong price move. Then it consolidates, and then starts the next wave, which is wave 1 and wave 3 are usually the same. We call this the classic, fry pan bottom, followed by a J-hook pattern. So we know pretty much if it opens positive, where our next target is, at least the 200-day moving average. Let's see. Yeah, hold on to your individual request, but Freeport we recommended a while back. Notice what it hasn't been able to do. It hasn't been able to get back up above or back below the T-line. Now you finally broke through the 200. Your trend channel remains in progress. We did MDR. Let's see. For some reason, I've got this one on here. Another one that's setting up the classic fry pan bottom, J-hook pattern. You can be buying this one. So somebody was asking, where do you buy on a J-hook? You can buy two places. One, you could buy right here because where do you think your next target is? At least to the top here. If it fails, you come back out with a small profit, hopefully. But if it fails, what's it telling us? Telling us that's a double top, not a J-hook. If it goes through, now we've got a pretty good notion that this wave is going to be the same as this wave right here. You can either buy here and watch to see what it does here, or you can buy up here knowing that you're in wave 3. The probabilities when it breaks out is much, much greater. Oh, these were working well. They got into this one in the chat room last week. When it broke out of this slow curve, these are the ones that I've made fortunes with. You can see the slow curve, then bam, as soon as they broke it out of the slow curve, look what it did. Went from $6 to practically $12 in 4 or 5 trading days. Now look what's happened. Pulled back, doji, pull back, doji, pull back, doji, doji, and where did the doji, doji occur? Right smack dab on the T-line. Now, when I say right smack dab on the T-line, you got to remember, nobody has the T-line on their charts, or the percentage of people is so minuscule, so it's not acting like a magnet, it's acting like a natural support that if it hits the T-line and starts back up, that's where human nature naturally finishes taking its profit and starts the next move. It's overbought, but remember, we're not buying stochastics. We're buying the pattern. The buy signals we're looking for to occur in the oversold area. The patterns we're usually going to be breaking out when we're already up in the overbought condition. So we're not teaching people how to trade stochastics. Stochastics just give us an idea where we are in that trend. That one's a good one. Huntsman, there's your nice J-hook pattern. Wave 1, wave 3 should take you up through the 200. And CC was another chemical company. Notice the big bullish belt hold type signal that took you through the 50. How long do you hold on to this? Until you see a sell signal and a close back below the T-line. Now, most of these I didn't even have to hunt for tonight because they were already pointed out in the chat room. There's your J-hook pattern closing right there at the 200 or just above it. You could be buying this one because there's your classic. See if I can make this a little bit smaller. Big fry pan bottom, strong price move, J-hook pattern, wave 1, wave 3 should take you up into about the $25 range. So this isn't rocket science. This is just the realization that human nature works the same way time after time, and the reason that we can see signals and patterns and identify what they mean is because they've worked for hundreds of years. This isn't something that's newfangled, new secrets of how to win at the market in the market. This is stuff that's been developed over the last 400 years. The Japanese rice traders that developed this did not become wealthy. They became legendarily wealthy in Japan. They were the financial powerhouse for centuries. And it was all based on one simple premise, that human nature works the same way. And they made their fortunes trading rice, which is the most lethargic, basic commodity in the world. Could you show me, well, that's another aspect. If they're right now, or a lot of times if there's surprises in the market, I mean, this market was in a downtrend. You might have covered your short position up here, but there are going to be times when if you decided to go long, you can't know when surprises come. But what it does do is tell you what happened or what you should do when those surprises come. If you see a doji gap down and you were long, there's only one thing you want to do. Close it as fast as possible. So learning how to invest is not also learning when to buy and get into a position. It's also teaching you using the graphics of candlesticks of when you should not be in a position and get out immediately. Again, going back to close your, keep your losses small and as small as possible, and let your profits run. Let's see. SRPT, little kind of, there's your little kicker signal. What happened? Pushed right up to the resistance level and broke through. Where do you think your next target is? There's a gap right here, which means there's no resistance till you get up to the 200-day moving average. The charts I'm doing right now are off of CQG, which is kind of the grandfather of all the charting services. As a matter of fact, a lot of the charting services might be like for TradeStation, or I know for Think or Swim, they use the feed from this charting service. Yep, it's CQG. I don't recommend it because it's about $1,000 a month. It just has good graphics and it works fast for something like this. I don't know what CCT is. It's not working. All right, let me finish up a few that are going to look good for tomorrow. I'll point them out. This one, there's your fry pan bottom, cup and handle, J-hook pattern, closing above the 50. There's a gap up here at the 200. So a lot of these have big upside potentials. And that's another thing that gives us the opportunity to go through with candlestick analysis is on the graphics. If we know what the strength is of the signal or pattern, and we know what our target is, we're not just buying stocks that are in an uptrend. We're buying stocks that have a great great upside potential. So here's GLF, another kind of bobble. This one you want to be buying immediately. So somebody asked, well, when do you buy? If we wake up tomorrow, this one closed at 707, and I can see in the pre-market trading, it's bidding at 710, asking 715. I'm going to be buying immediately because that tells me they are confirming this pattern. Now, are there times they take it right up and immediately take it down? Definitely. But I would rather be buying something that's confirming than worrying about whether they're taking it back down, because the probabilities are probably 10 to 1 or even greater that if the pattern is working and the signal is working, that's why we're looking at them today, is because the patterns work. LPI, another J-hook pattern, and notice where they couldn't close it? Back below the T-line. There's at least your first target. Can you just put a buy? Yes, you can buy on a stop. So if you can't, and a lot of people say, well, can we trade if we've got to drive to work or we can't get to the chart? Yes, you set up your trading program based upon your schedule. Obviously, you're not going to be a day trader if you're working all day, or if you can only get to your computer screen once a day. You might be setting up trades to do on a swing trade basis or longer term, depending on what your schedule is. Here's another one, BRS. Notice what they couldn't do here at the 50/T line. There's wave 1. Look for wave 3, and if wave 3 opens, if this opens positive tomorrow, what's it telling us? Number 1, it's confirming this signal. Number 2, it's telling us that this level right here is not acting as resistance anymore. So if I was going to buy this tomorrow and I couldn't be there, it closed at 1983, got as high as 1993. I might just put a buy stop at $20. Say if it comes up through $20, I know the chart's working. SLCA, there's your bobble. This tells me we're in wave 3. TSC, there's your morning star signal. So what's this morning star signal telling us? Well, morning star signal is one of the 12 major signals that works very effectively. If it opens positive tomorrow, what's that telling us? Number 1, it's confirming the signal. Number 2, it's breaking this little downward trend channel. We're probably in wave 3. So very simply, if you bought this and it traded up, where would you not want to see this close tomorrow? Back below the halfway point of the candle that told us the bulls were in control. If it did that, we were right back out of it, because what did it tell us about this signal? Didn't confirm. And what did it tell us about this trend? It's still in this downtrend. We don't want to be in that downtrend. We close it back out. I would guess that probably 1/3 of my trades are going to be losers. They're not usually going to be very big losers, but It used to be, I figured because I was smarter than everybody else, that every time I put on a trade, it should be working. And when it wasn't working, it was because people that weren't as smart as me didn't realize why they should be buying it yet. Then I turned out to be the one that was always panic selling at the bottom or buying exuberantly at the top. When candlesticks came along, I could see exactly the stupid things that I was doing graphically. Oh, how do I expand the chart? Oh, there's just little tabs over here that make it bigger, or I can come over here and slide it up and down. Yeah, so there's different ways. So, but right now, I forgot what I was saying. Oh, right now, I know that mentally, I've already told myself, not every trade's going to work. If I buy this one on positive trading tomorrow and it closes back down here, it didn't work. Close it out and move on to the next one. Does that hurt to take a loss? Yeah, but that's part of the business. What I'm looking for is a trade. I'm not worried about the little losses I have. I'm trying to find the trades that are going to produce big profits like that. So I've got two things going for me. One, the losses are very small. The profits are usually big, but the probabilities also of being in the right trade at the right time are greatly enhanced. Do we even wait for multiple confirmation? You don't have to. The nice thing about candlesticks is that if this is our signal and we can see what pattern it's creating, we can see stochastics coming up, you can see that in an instant. I mean, you just look at it and say, oh, that's a pattern setting up, and it's got a signal to it. On this one, if I was buying this one on positive trading, I probably wouldn't want to see it traded all back below this level, because if it has enough strength to trade back down there, there's not any buying force. I probably wouldn't want to see it trade back or close back below the halfway point of this candle. Oh, SLCA is down $1.16, and it was up $1.77, so it's down here. So if I was looking at this to buy on positive trading tomorrow and it opened down here, say, nah, I don't want to touch it. Now, if it opened here and all of a sudden started moving back up through, that's still confirming my signal. I'd buy it as it came back up through the previous day's close. Oh, it's not wisdom, Jamie. I tell people, if you learn from your mistakes, I'm one of the smartest people you'll ever run into. Okay, and I think I only had one that I was looking at on the short side. HNT, if this opens lower tomorrow, you can see what you've got. You've got your doji gap down and then trading below the T-line, stochastics heading down. Where's your next likely target? Probably at least coming back down and test the lows. Oops. All right, I should be doing this way. All right, are there any questions on candlesticks? Humana, I wouldn't be as apt to short because notice how it pulled back and used this area and did a hammer. Now, if it opens lower tomorrow, yes, then I'd be shorting, but then I'd just put my stop at today's open. But if it came up through there, they're buying again. You can use the T-line on any time frame. This is the daily chart. You can go to the weekly chart. See what it's doing. Looks like it's just kind of pulling back on the weekly chart. You can go to the monthly chart. See that on the monthly basis, it's starting back up. So you can see what type of pattern it's forming on the monthly chart. There again is your fry pan bottom, J-hook pattern. So your short-term trading might say, I don't want to be buying it. Let's say, whoops, that's a 10-minute chart. Went too short-term. The daily chart says, I might not be buying it right now, but if it does a J-hook pattern and starts coming back up, I want to be buying it for a longer term hold because we can already see what it would be doing to our weekly chart, which is broken out of this downtrending channel, and we can see what's happening on the monthly chart, doing a J-hook type pattern. Yes, this had been recorded. Any scanner for candlestick pattern? Metastock has all the our formulas. Like there's 21 different scans you can do on Metastock, finding our signals and patterns, and they show up automatically on the charts. Do you look at actual volume at all, or is it inherent in the size of the candle? No, don't look at volume. The only thing I do on volume is I create my universe, which is stocks greater than 5 and stocks that are trading on an average of more than 200,000 shares a day. That's the minimum. Now, that doesn't stop me from buying a $60 stock that only trades 100,000 shares, because I'm not going to buy 5,000 shares. I wish I could. So I want to be able to get in and out of my stocks or my positions with good liquidity very easily. So I've already scanned for stocks that have volume, but volume doesn't have anything to, once I've found stocks that have the volume that I'm looking for, it doesn't now affect my decision for buying and selling, other than if I saw this big move or this big move right here and they started selling it off on huge volume, that told me there's lots of change of ownership. Julian, you can use stop losses on options, that which they call a contingency trade, that you put in that if the stock comes back down through 50, put a sell order in on my option position. Yes, and Gene, that's another element. Gene's saying that he used the T-line on the weekly scan, and it works very well. The nice thing about candlesticks is we know, or at least I know, that they work extremely well. And you can see how simple my charts are. But if somebody comes along and says, oh, you want to try the Bigalow indicator, well, I can throw it on the chart, and if it works, fine, I'll keep it there. If it doesn't work, I take it back off because I already know my charts are working. It doesn't change my my aspect. So do you use implied volatility? No, because if you were buying something like this, you can see there wasn't very much volatility. And when it broke out, you had this volatility. So I don't use deltas. I don't, and I don't worry about volatility. The volatility will be based on what the reaction is or the results of the chart. I don't use RSI, but you can use RSI. Hold on for 1 second, please. Okay, sorry about that. Ran out of water. Stochastics can also represent the candle condition. Yes, I just had to grab water. Okay, Jim, if you want to do the double line, just use one. Try to do one request at a time, so we can get everybody in. NWS, that doesn't look like. Oh, that's because we're on the monthly. That's why. You stay long on this one. You can see how it did a little bobble here at the 50. More than likely, they're going to the 200. Oops, you scrolled past me. Let's see, Mobley. Another one. You want to be buying. You can see the classic pattern setting up, the fry pan bottom, the J hook. You can see the doji. We know that there's a simple rule of the doji. If it opens positive tomorrow, you buy immediately because your doji sandwich will confirm that the J hook pattern's in progress. Wynn Resorts, you can be buying this one. You can also see that J hook pattern in progress. Apple has had a good chart. It's probably heading up. You can see how they pulled back right to the T line, and notice what the nature of the trading was when it was pulling back. Very indecisive. Then notice what happened there doing the J-hook pattern. They gapped up through this area. That tells you they don't care about that resistance anymore. They're heading higher. VHC, another one that I'd be buying on positive trading tomorrow. You can see what happened right here at the 200. Doji, bullish trading day up through the T line and the 50. If they open this one positive tomorrow, what's it doing? It's confirming the signal. It's telling you the 50 and the T line aren't acting as a resistance. And it's also breaking this little downtrending channel. Now, that one's got the potential of even just coming back up here would be a good 75% gain. We recommended PAW not too long ago. Just stay long on this one. Nice big fry pan bottom in progress. I think we did SR. Whoops. SRPT. Yes, we did this one. This one you want to buy immediately on positive trading tomorrow. Notice your little kicker signal, scoop type pattern. And ALNY, yes, there's your bearish doji sandwich. Make this a little bit bigger. Bearish doji sandwich. And what do we know about a doji sandwich? There's usually going to be more in that direction. So if they start trading this lower, we're pretty much breaking this resist or support level. You could be heading all the way down. If this is wave one, this is wave two. Wave three will come down into the same trajectory down here into the low 40s, low 30s. Rig, another one you buy on positive trading. Tomorrow, J-hook pattern. These are homes. There's little J-hook type pattern. You can buy this one. If it opens positive, it's telling you this little level is not acting as resistance anymore. Whoops, went way too far. TRXC, you can buy this one. Very simple. If you buy this on positive trading, don't let it close halfway down this candle tomorrow. Whiting, we're buying this one right now, short term and long term. And long term on the basis that even on a few weeks basis, they could bring it back up to the 200, which would be a good 80% return on that trade. CCJ, you want to see this one open and trade positive tomorrow. If it opens lower after a shooting star, more than likely there's going to be some consolidation. And that consolidation could bring you back to the T-line doing kind of a bobble. So you'd be heading down for a few days. PCG, you buy this one. Notice what happened when they did the bobble. They gapped it through the resistance level. That's telling us wave one, wave three is in progress. That's a good looking chart. And mankind. Mankind has been thrown around in the chat room recently. Everybody was worried when they gapped it down. They sold out, and we said buy it right back because notice what it wasn't doing. It wasn't closing below the T line. And what does a belt hold type signal do? Wipes out a lot of the sellers. So you can see how the trajectory is up nice. Then the trajectory after the belt hold has now got a lot more rampant because there's no sellers in the way anymore. Another fry pan bottom, and there's your doji sandwich. There's your J-hook pattern. All you can do right now on this one is stay long until you see a sell signal. CBay, you can buy this one anticipating going to the 200. Notice what it did today. It came right back and used the T-line as support and took it back up. That pretty much told you the natural move of this stock is they're supporting, heading higher. Just make sure your volume's good. And Tazar, you can get ready to buy this one on positive trading. You want to see it break this little downtrending channel. If it does, you know, they could move it up to the 200-day moving average from here. Basic Energy, you can buy this one on positive trading. Good percentage move to get back up to the 200. STO, get ready to buy this one. Notice they gapped up. Whenever they gap up to a resistance level, they know the resistance level is there. If they're gapping it up, that means they don't have that much concern about it. This one you definitely can buy on positive trading tomorrow. Again, because it's going to move in the direction of how they open it after a doji, and they gapped up to the resistance level, that tells you there's going to be more upside. Boot, you can see where they consolidated to, right smack dab to the 50. Starting back up, another one you can buy if it comes up through this little downtrending channel. Ross Stores, just stay long. Not a very exciting stock, but definitely in a good uptrend above the T line. SDCP didn't come up. Pepsi, another one that's not very exciting, but it's in an uptrend. Moody's, this one's got the J-hook pattern. Just watch to see what it does once it gets to the 200. And PayPal, very simple. It's going to move in the direction of how they open after a doji. If they open it positive, you buy immediately because that tells you they broke out through this level. Now, a lot of these opening positive are going to be a function of when you wake up in the morning, you see what the pre-market futures are telling us. And if the pre-market futures are up, we're buying immediately on positive opens on trades after a doji. Silver Wheaton, just stay long. Notice it used the 3T line today as support, which means they aren't anywhere near selling this one off yet. Newmont, just stay long. Dust hasn't been able to get back up above the, again, the opposite of Nugget. So right now, it looks like the golds are moving back up, which means Dust is going to continue to move down. And Avid, I wouldn't be long or short this one. You can see when it broke out, it came right back down. I wouldn't be long or short because you don't have any direction to this one. And Caesars did a big inverted hammer. This is one of the 12 major signals. Whenever you see that big inverted hammer and they open it positive the next day, the probabilities are probably 95% or greater you're going to start moving up. So I'd be buying this one on positive trading. Obviously, you watch to see what it does once it gets back up here to the T line and the 50-day moving average. TBW, just stay long, or you could be buying this one on positive trading tomorrow. PRMW, nothing real exciting on this one. This one hasn't had any real direction to it. I'd be trading something else. ILMN, just if this opens lower, you can still be shorting this one. If I was short, I wouldn't want to see it trade back up through today's high. That would tell me there's a little bit too much strength in it. PACW. If you're long, this one has to open positive. If it opens weaker tomorrow, they're bringing it back down to the 50, which means you're not in a very good trajectory. And Red Hat. Same scenario. It has to move, open positive. You have a doji. If it opens lower, they're coming back to test the T-line. Amazon. Amazon, we're not trading this one at all because there's no direction. When it came up through here, it needed to open positive and trade positive. So right now you're in a sideways. I'd be someplace else. There's too many other charts out there, like Netflix. If this opens positive, you can see that it's staying up above the T-line. Palo. Palo also, same scenario. Doji, if it opens lower, you close it out because they're going to come back and test the 50. VIX. That's a big Morningstar signal. And remember, the bigger the signal, the more compelling there's been a change of investor sentiment. So this one you can get ready to buy on positive trading tomorrow because that would tell you the J-hook pattern is confirming. Monster. Oh, let's take a gander here. Got a little Morningstar signal. You can be buying this one on the anticipation they could bring it back up to the 50, which is right here, filling this gap. So very simple again. If you're buying this one on positive trading, don't let it close below the halfway point of this candle, which would kind of still tell you they're just drifting sideways. UWTI, this one you can be buying based on the strength of the crude oil right now. ATW, I think we did this. Yes, this one you want to be buying. Nice cup and handle type setup. Could, again, going from 10 to 15, a good 50% move to the upside. Roger, yeah, that's another training, and I'm getting that one set up right now. If the T-line doesn't come back below the, if the 3T doesn't come back below the T-line, not a real true sell signal. Or on the other hand, when the T-line does come up through, the 3T comes up through the T-line and the signal's there, just gives you added confirmation that there's been a change of investor sentiment. Are we still in a bear market, or does this bull have legs? Doesn't matter. And the only reason I say that is you can call it whatever you want to. We were buying from down here when it had the double bottom and came up above the T-line. Whether you want to call this a bear market or bull market, we made tons of money during this last 4 or 5 weeks. We don't care which direction it looks like the overall market is going. And so I wouldn't call this a bull market or a bear market. But the major advantage we have as candlestick investors, again, being a swing trader, I know that I'm going to make money, and then when it reverses, I can see where it reverses. I can see what this trend line is telling me. If they've broken through that trend line, so there's nothing there. So what's that tell me? Probably now they're coming back up into this range. So I know I've got a few more days to the upside. Makes sense. All right. Comment on Barry. All I can say is baseball, it's been very, very good to me. Stay long. Now, when we start seeing them move exponentially like this, or whatever, that's not the word, but just put a stop right here. There shouldn't be any reason for it to come back down through there. But notice how the J-hook little slingshot effect got you started. TGNA, nothing real exciting here yet. I would probably be more apt to be a buyer if they could get it up through this little downtrending channel. But if they did, you can see that you had kind of a piercing signal, not kind of you had a piercing signal right here on the 50. So I'd be a buyer on more strength, knowing that the first target was going to be the 200-day moving average. Tyson, this is what we call 45 degree. Notice when it broke out big. And after that, you just had a nice steady uptrend. So this 45 degree has a very simple criteria. You stay long until you see a sell signal and a close back below the T line. All right. IDXX, nothing here. Now, if I was short, if it opened positive, I'd cover my short position because at least they'd probably be bouncing it back up to this level. If it opens lower, you can still be shorting it because that still makes the 200 and the 50 moving average is the next target. Oshkosh, you buy this immediately on positive trading tomorrow. Wave 1, wave 2, wave 3 should bring you up here someplace. Fry pan bottom. Fry pan bottom was in the not as smooth as I would have wanted to see what this one looks like. Trying to think of which one had a fry pan bottom. Fry pan bottom's a big, slow rounding bottom that you couldn't trade one way or the other. But we know the results of a fry pan bottom is usually when they get to the back to the beginning of the fry pan bottom, that's when they break out to the upside. There's 6 or 7 candlestick patterns that you want to learn. The fry pan bottom and the J-hook pattern are the predominant ones. Then you've got the cradle pattern, the belt hold, cradle pattern, belt hold, scoop pattern. They're all just high probability patterns that keep working well based on human nature. The oil vector, nice J-hook pattern. You can still be buying this one. I think we did win. You can be buying this one, J-hook pattern on positive trading, breaking out to the upside. Notice your bullish engulfing signal. Notice down here. Let's say notice. Can't even see it. There's our doji, and what do we know about a doji? The price is going to move in the direction of how they open it after a doji. Nugget starting to pick up some new energy because of gold. See where it had the big morning star signal. Right now you stay long on Nugget as long as it stays above the T line. And that's pretty much because gold has gotten back up above the T line. So just because it trades below the T line, you should be, or not just because, when it does trade below the T line, you get out of it. When it trades back up above the T line, you get back in it. That tells us our uptrend is still in progress. The stocks. Stay long on this one. You can see how the T-line crunch is kind of pushing this up through the 200-day moving average. CTRP, this one you can get ready to buy. This had a bullish signal. I wouldn't have bought it today. I would have bought it on positive trading. But notice it opened down here, traded down, and then came back up. What did this tell you, though? Told you the bull's heading left here. So if I was going to buy this, I'd put a buy stop just above today's high, because if it comes up through there, it's confirming that this buying is still going on, and it's breaking this level right here, and it's telling us they can't take it back below the 50s, that they're now in an uptrend. HPE did a doji up here in the overbought condition. So whenever you see a doji in the overbought condition, that's telling you to be a little bit wary. At this point, I'd put my sell stop just below today's low, because if they come in this direction, where do you think they're taking it to? Or at least taking it back down to the T line. What's the worst case scenario? They take it down and then bring it back up. You can always buy it back if it comes up through that level, because it tells you the selling was negated, that your uptrend is still in progress. TXRH, you can be buying this one. I'd be more apt to buy it when it broke through the $43 level, telling me wave 1, wave 2, wave 3 is in progress. A J hook, Robert, I'll get to a J hook. I'll find one here. No, I don't buy pre-market because usually there's not enough volume. Pre-market prices can move around. The only time that the pre-market prices have any relevance is about 2 minutes before the open. That's when all the biggies have come in and put in their buys and sells. Can you review again why you have the stochastics on screen if you don't really look at it in your analysis? I do look at it in my analysis. If I was looking at this hammer signal and it's down here in the oversold area, that's more credibility that if they start trading positive, I've got a reversal. The only time stochastics aren't as pertinent, again, we're buying the signals when they're in the oversold area. We're usually buying the patterns when they're already in the overbought area, because that tells you the new enthusiasms on that breakout is coming in. Yeah, stochastics, if they're above this 80 line, they're overbought. If they're below 20, and maybe 20 is not on there, they're in the oversold condition. American Airlines, there was your big bullish engulfing signal after a hammer signal. Stochastics down here. Right now, all you can do is stay long, as long as it stays above the T line. Yeah, remember, we're not buying stochastics. Stochastics just tell us where the signal is occurring. Obviously, a buy signal in the overbought area doesn't mean very much. What are pre-market futures? Ivory, when we get up in the morning, I mean, there's futures always being traded. When you get up in the morning, if you have CNBC or Bloomberg on, you'll see what the pre-market futures are showing you. So it shows you that the pre-market futures are looking like the Dow's going to be up 100 points because the pre-market futures are up 100. That's pretty good indication that they're going to be buying out of the chute because there's buying going on. Let's see, I didn't do that one right. So that's what they call the pre-market futures. If we wake up and we think the market's heading up, and tomorrow we wake up and we see the pre-market futures are showing the Dow's going to open up down 85 points, yeah, that's not the right direction. We don't jump in there and start buying immediately. Let's see. But can you review an example of such a pattern? Marco, I don't remember what that pattern is. Type it in again. Yes, and a lot of your trading platforms. I know on Thinkorswim, if you've got a stock on your watch list over the left-hand column, it'll show what the bid and ask is before the market opens. May soybeans. Whoops. May soybeans. are up in the overbought area. You had a shooting star. You're reaching the resistance level, and you've also got this kind of resistance level. So if you're long, you stay long, but you get ready for a reversal unless it breaks through the 200. Market needs some correcting. Okay, but remember, we're not trying to project what the market's trying to do, Neil. We're doing what the market is telling us it's doing. So right now we're in the overbought area. It's starting to get a little bit of enthusiasm here. But remember, the NASDAQ didn't have that much enthusiasm. It's sitting right here on the T line. So I would suspect we still have more upside for the next few days anyways. Yep, and you can sit out some days. There's going to be some days where the markets are just trading junky. If you can't figure out which way it's going, the whole point of using candlestick signals is they give you a high probability of which way prices are moving. And if you can't figure it out, because the market can't figure it out, sit out. I'd rather sit for a few days. As a matter of fact, I enjoy sitting for a few days. I can go out and work on the cars or ride my tractor. But I want to buy or sell when I know what the probability is showing we're heading in the right, or what direction we're heading in. Okay. What is a sell signal? There's buy signals and there's sell signals. Remember, a doji followed by a gap up in the oversold condition is a strong buy. A doji followed by a gap down in the overbought condition is a strong sell. A doji, this is a dragonfly doji, is a hanging man. Or there's your bearish left-right combo. So there's 6 sell signals and 6 buy signals, basically. Did I do the J-hook pattern for... Oh, I know these are J-hook patterns. J-hook patterns, when you move up, you pull back and you do a hook, and you're going into the J of the next move. The T-line, somewhat confusing. No, the T-line is very simple. If you see a candlestick sell signal and a close below the T-line, you should be out of the trade. Notice how you had a wedge formation right here, and then they broke it below the T-line on a sell signal. You stay short until you see a buy signal and a close back up above the T-line. I made good money trading candlesticks without the T-line, and when one of my first private training students showed me the T-line and said, this seems to work, I used it, and my income has grown, I won't say astronomically, but very, very well, or very much better from where it was. Salesforce is right here at the 200, obviously. It started from the big bullish engulfing signal, did the bobble right here, did a doji right here at the 200. Makes this very simple. If they open it lower, you probably want to take some profits. If they don't close below the T-line, get ready to buy it back if it comes back up through the 200. But price closes above the T-line, but again, trend reversed. Oh, Muni, I don't know which one you were referring to. Muni, it depends on what you're trading, or what your time frame is. Now, if I'm trading crude oil right now. What one is it? All right, so I know on a daily chart, crude oil is heading back up on a J-hook pattern. So I just flip to my 10-minute chart. Let's find. And over here, I can see I was buying here. I'm closing it out here or going short. I'm buying here. This is a 10-minute chart. And then when the chart gets like this and I don't know which way it's going, I close it out. because I don't want to be trading something I have no idea what's going on. Right now, you can see on the 10-minute chart, and this is after hours, so it's usually very slow. They're slowly bringing it back up. That is the 10-minute chart. If I want to flip down to the 5-minute chart, it's going to trade a little bit faster. If I was trading this now, and then if I'm trading something, and the 10-minute chart looks good, the 5-minute is setting up, then I flip down to my 1-minute chart to make sure that it's moving in the direction it should be to continue the confirmation of the 5 and 10-minute chart. Arrows, you can be buying this one on positive trading. This is your fry pan bottom, a big rounding bottom that you couldn't trade, and then it started breaking out right at the beginning of this pattern. I'm still supposed to be looking for a J-hook pattern. This is what I'd consider a J-hook pattern. Wave 1, wave 2, and kicked into wave 3, stuttered stepped here. But there's another little J-hook pattern right before the next move to the upside. IBN. Whoops, I boo-booed there, didn't I? IBN. You can see the T-line crunch. You can see the bobble. So right now you just stay long as it stays above the T-line. Yeah, 5-minute charts is just for trading intraday. So if you're trading intraday, you might use a combination of 1-minute, 5-minute, 10-minute chart. D Kingdom, I usually come in, well, I'm usually making comments right on the open. Sometimes if I see something real dramatic, I'll come in verbally. But usually I'll make comments in the chat room. The chat room looks just like this. This is the chat room. I'll put comments in that we're buying BBG on the positive trading. Yesterday we were buying EPE right on the open. And it had a big percent move and it's still moving up today. Then I usually come in around 11:30. It could be 10 minutes early. It could be 12 o'clock. But right around midday when things settle down and we go through this same process where we kind of analyze charts, what different things are doing. Somebody asked earlier whether we comment on Forex. We don't. I don't do Forex. But I do buy the dollar, sell the euro, but I do it just on a straight basis. If I was doing something, I might just be buying the euro outright or the British pound. That's not the British pound. Might be buying the British pound. There's our left-right combo, gap up. So I don't trade the Forex with a combination. Would you buy contra ETFs in a down market? Yes. If you are a lot of people that can't trade or go short might buy short funds in a down market. The T-line works on any time frame. The intraday chart settings are the same. If I was thinking the British pound was going to trade higher, that's my 5-minute chart. Let's flip to the 5-minute chart, and as you can see, it doesn't look any different than any other chart. Yep, another. When in doubt, stay out. If you're not feeling well, stay out. If you're arguing with your wife or your husband, stay out. Want to make sure that you're If the cat is laying all over your keyboard, throw her out. Do. Darn cat. We did this one. Who are super traders? Oh, in the option and futures trading room, we got Nora, we got Big Al, we got Don M. In the regular trading room, we've got David L. People that come up with good chart suggestions, Steve P. Uh, and what's fast that you'll learn is you'll see who's kind of trading the same as you are. They'll say I'm scalping this one, or I'm swing trading this one, or I'm day trading this one, and you'll start seeing if, when David L brings up or suggests a chart, I look at it immediately because I know he's got the scanning down pat. So if David L, and some of these are David L's, I think. So when David L says McDermott, I'll go to the McDermott chart because I usually find that I would say 95% of his charts are good setups. The gray line is the 20-day moving average. The black line is the 8 exponential moving average. If you enter a trade on a gap up following a doji sandwich, where do you put your stop? Usually back at the halfway point of the second candle of the doji sandwich. If it's a setup, doji sandwich. Ooh, there was a doji sandwich. Here's a doji sandwich on the Dow. This is what we call a McMuffin. There's our morning star signal. There's our doji sandwich, or a morning sandwich. We call a McMuffin. And we know what the results of a McMuffin is. Very high probability you're in an uptrend. So had this opened positive here and then traded and closed back down here, that didn't confirm. Or if we did have the doji sandwich and it opened here, I wouldn't want to see it close back below the halfway point of this candle that was part of our buy signal. LexSmart, you can be buying. Now remember, LexSmart has a story behind it, which is they've been trying to get themselves sold because they think at this price it's not showing anywhere near the value of what their company's worth. They think it's worth 80. So they've been trying to sell themselves, and supposedly they've got people they're negotiating with. And so not only is it a good buy signal right here, left-right combo bouncing off the 50, more than likely it's going to move back up to this level, but it's also got that added little stimulus there that it could be somebody taking it over at a much higher price. Now, it used to be I was the last fool in when I heard somebody being taken over. You always have to kind of think, if you're out here in the hinterlands, why do you think you're going to be one of the first people to find out about a buyout situation? So I was usually buying the buyout rumor right here, and bam, it'd go the other way. Now I know if there's something going on and I can look at the chart and the chart looks like a good buy, that's when I get in. Okay, do you have a trading room special? Neil, I think we do. And I think in this, somebody said earlier that if you bought the $17 package that you get a 30-day free trial to the website. What option strategies do you trade? When we do training in our options training room, William, we're not trying to teach people new option strategies. We're trying to show which option strategies work appropriately for the type of chart pattern that we're looking at. So a lot of people, or a lot of times, if we can see the J-hook pattern and we know what our upside potential is, we're going to be putting on a spread versus just an outright option trade. And then there's probably about 20% of the time we'll be buying options outright, and probably 80% of the time we'll either be putting on a credit spread or a debit spread. And we are in the process right now of putting together a 4-week training course starting from the very basics, going all the way through on which strategies to use with which patterns. So the number one criteria for putting on an option trade is knowing that the underlying entity is moving in the direction that you expect it to be moving. Do you usually play with 1 hour charts, or what do you trade with? I usually trade off the 10-minute chart. Because I'm not trading that long. Now, there's other, depending on your time schedule or your trading schedule, you might use a 10-minute chart, an hourly chart, and a daily chart. Means your trades you're expecting to be 2 or 3 days. If you trade a little bit slower, you might use a 5-minute, 15-minute hourly chart. Does the day of the week influence your buying? No, the only thing that influences my buying is whether there's a buy signal or a sell signal occurring. Do you not trade because it's less effective? Yeah, Forex to me was just another method years ago for making another trading entity. I would rather people have a hard time just figuring out which way one trading entity is going to go versus trying to mix them all up. I make just as much money shorting the dollar and let it sit there for 4 or 5 days versus trying to trade Forex. McMuffin is a doji or a morning star signal followed by a doji sandwich or a morning sandwich. Just to make clear on this, when you say buy on positive open, do you mean the particular stock you're looking to buy or the market in general? What I don't want to see is if I was buying BBG on a positive open tomorrow, that means I don't want to see the market opening up down 100 points or the pre-market futures showing that it's going to open up much lower. Or I don't want to see the stock opening here. I want to see the stock opening flat or positive and that the market is still moving in the direction that we think it should be moving. So if the Dow was opening down 100 points and this was opening right here, I probably wouldn't jump in just yet. I would see whether it's going to move in spite of the market trading down or whether it was going to hover here and wait for the market after opening down, start coming back up later in the day. Can you trade daily charts without using the intraday charts to see what directions you're going? Or how can you trade daily charts without using the intraday charts to see? Because I'm already analyzing my daily chart based on what it should be doing. Or usually if I'm intraday trading something, if I know that they open Apple tomorrow higher after a doji, that's going to trade higher. Well, then I can, if I'm intraday trading, I can trade on that basis that I know that the daily direction is moving higher. I want to trade the 10-minute chart or the 5-minute chart in that same direction. I don't trade leaps at all. I'm not looking that far out. I will sell puts when what we train people in the options trainings is that it's number one, we want to find the best trades, and number two, the math has to make sense. A lot of people say, oh, this stock's going up, I'm going to buy the calls. Well, that may not make any sense just buying the calls. You might be better off in the time frame that's left until expiration that you want to be selling the puts, which is a bullish trade. So again, what we try to get around is get the right trade for the right condition of that, what that chart's telling you. Okay, let's see. How do you stomach the swings on the 10-minute chart and stay in the chart for days when it's up and back down in the day? Remember, everything during the middle part of the day is just noise. let's see if I can, that was today on the dollar, or on the, well, it was predominantly up, but there was times that it would pull back. You might come out of the trade and get back in it, knowing that you're predominantly in an upward trend, but you don't know if something like this is telling you they're just about ready to slam it down. And that happened in cotton today. See if I can. This is a 5-minute chart on cotton. We were long here, and we closed it out here, looking to get back in, but bam, they took it down hard and then brought it right back up. So we closed out cotton because that was the sell. We didn't buy until, we got ready to buy here, but it didn't confirm. And so we didn't have to worry about not being in. A lot of times, if you know what direction the chart is moving, which in this case, we're thinking we're still in an uptrend on cotton, you sometimes get out of the trade and get back into it later. Is it rare for you to enter a trade? Oh, sometimes it's not rare for me to get into a trade and be out of it 3 minutes later because it didn't work. I'd rather lose $150 on a trade than $1,500. Sell puts when premium is rich. That's right. You want to. Who leads your futures room, and what are the hours? Jim, same scenario. I will come in there for a few minutes each day, but my conversation in the options trading in the futures room, I put comments in there all the time, and I put our recommendations. Usually, if you're a member of the futures trading area, you're in the room, and then if you're not in the room, you get emailed or Gmailed or whatever Abe does, sends a message out that we're buying coffee, we're buying crude oil, we're selling wheat, all depending on what trades we're doing. But I usually come in once or twice a day into the futures room and just kind of verbally go through things. Yes, you can use the, and again, Haga, if it depends on how fast you're trading. So, and my analysis is based on the charts that seem to work for me in the time frame that I work. If you look at the daily or the if you look at the well, if you're trading only 2 or 3 times a day, you might use a much longer time frame, a 15 and an hourly combination. How long are my average trades? All depends on I usually project 2 to 10 trading days. But if I'm buying right here and I don't have a sell signal for 2 months, I'll hold on to that position for 2 months. Oh boy, I kept you all way past your bedtime. All right, I hope you got some good information tonight. What time do you usually come in the morning? Again, I'm talking in the rooms right from the open. At least putting text in. And if I see something in something that's very important, I'll just come in verbally, bring up the charts. Yeah, 3 hours. This was only supposed to be 2 hours, but it's just fun looking at the charts, knowing that. And I say fun for me because at one time being the worst investor in the world, it's just like finding that white, brand new Titleist in the weeds. It's a benefit, and that's what good looking chart does to you. All right, everybody have a good evening. Hopefully we'll see all of you in the chat room bright and early tomorrow morning. We'll see you then.